Hello, guys. So we're here. We're talking about the Fed. We're talking about what's going to happen. Right now, it is very much looking like a 75 basis point hike. I want to highlight something to you before we fully get into this. AJ, what are you thinking about what's happening at the moment? I know we've had a bit of movement in the market since we last went online earlier.
Yeah, so we're seeing some bullish price action towards the upside as of right now. Coming into this meeting. So yeah, we'll sort of see how the market reacts to the rate hike data when it comes out.
That's the thing. I very much am thinking that we are going to have a 75 basis point hike. It seems to be very much priced into the market. So as you can see here, this is what everybody's waiting for, the Fed rate decision. And it's going to happen in 7. I'm going to update this. It's going to be 5 minutes. So as you can see here, the odds very much are on a 75 basis point hike. One thing, though, that I do want to kind of bring your attention to, and the reason why I think, everybody is pricing in because, we see, okay, well, if it's 75 basis points, I've always said to you, and me and AJ have always had the same story, that if it's 75, it's going to be bullish in the short term, and it's going to be a little bit bearish or more bearish than a 1% in the slightly longer term, because at 75 basis points, it's not a huge control over inflation from the Fed. And obviously at 1%, it's bad for businesses in the short term, but it's better because inflation will be gone sooner. But one thing that I want to highlight here, and I actually think this is a really, really good tweet from Bill Ackman, and this kind of been thrown around on Wall Street, is that the Federal Reserve goal at its June the 15th meeting, so that was like a month and a half ago, was to tighten financial conditions by raising the Fed FF is Fed fund rate, basically this little rate here that I'm talking about, was to tighten financial conditions by raising this by 75 basis points and sending a message about being tough on inflation. So the whole point about this is that they need to be tough on inflation. Not that, we'll just go for 75 basis points because, and then we have the reason afterwards. It's no, the whole reason is become tough on inflation. And so the best way to do that is 75 basis points. So it was the reason that came first and the number came afterwards. But since the close on June the 14th, the 2-year, 10-year, and 30-year Treasury rates, they are down. But the NASDAQ is up. So if your whole message is, hey, we're going to go to a crazy number just so that we can show that we're being tough on inflation, but it hasn't had any effect on the market, should they stick by 75? I think no. I think that realistically, they should be going much higher. I think that realistically, a 1% should be on the cards because they are going to go away for 2 months. And I think 1% is kind of going to put us in a good position for a pump towards the end of the year. But I know that that's what the market, or that's not what the market is generally kind of accepting or expecting, I should say. Yeah. Controversial opinion, I'm sitting here, AJ, saying, look, mate, I want to crash the market, which I know people don't necessarily like. But it does very much look, and let's have just a quick look. We've got about a minute and a half or so. AJ, I've brought your charts up here. So this is on the 1 minute.
1 minute, yes.
But you can see we've had a massive run up, haven't we?
Yeah, we have. Coming up to this meeting, we've had a pretty good run up. From sort of earlier on today, sitting around 21,100, and coming up all the way to sort of 21,700. So a bit of a move towards the upside. Nothing too extreme, but we have initially had that movement towards the upside coming into this meeting.
Yeah, we also have the NASDAQ up by 2.5% roughly since the beginning of the trading days. And so, that is a little push to the upside. We are going to hit in that area of, resistance, as you can see there.
Yeah, we're in the green today and just keeping an eye on the time. About less than 1 minute now. And coming up into that resistance level again. We'll see what happens, when this data comes out. We'll see if we can break above it. And I did, post a tweet. I don't want to talk too much. That's for another day. But I did post a tweet about, sort of in the first hour, we do see a lot of volatility after the rate hike decision from the FOMC meeting does come out. We see a lot of volatility. So yeah, just stay safe and use your protection if you are trading.
Yeah, and obviously you guys, you can follow the what we mentioned earlier in our previous video of different limit orders that we might put in, where our take profits would be, etc. But I'm going to bring up the data here so you can see it. It just looks a little bit better on Daily FX. I can go obviously to the official website, but it's pretty much the same. But look, bullish on gold, kind of
So
bearish
data
on
come
the
out. We're seeing a big pump. Oh my
here.
God. Here we go.
Big pump. So I imagine it's probably would have come out at 0.75. Let me refresh. Hopefully it should usually just feed straight through. Let's have a little look. So
My dog crying in the background.
It is 10 p.m. It's not loaded up on mine for some reason.
Let me have a look on my screen.
Have a little look. So it seems as though we're going to be going long if we've had a pump. Let's just bring your screen up quickly. So massive pump to the upside on the 1 minute for Bitcoin. Just having a quick look over on mine. Mine hasn't seemed. Oh, here we are. So we're in. So it's 0.75. 0.75. So yeah, we're gonna. So this is obviously where we're going to see a bit of a pump. Some of this will have already been priced in, and so having a look at this on the chart here, so you can see this. Yes, move to the upside.
We are seeing some nice bullish movement towards the outside, and this is great. Seeing a 0.75. Personally, for me, looking sort of. If I just show this chart here, basically what I'm looking at here, we're at this level of resistance. I think, this news is going to take us above this resistance. But what we can see here, I've drawn this line in for you here, this diagonal downwards trending yellow line. And what I'm looking at here is that, if we break above this level, it has been, very strong resistance. And this is on the 12-hour. So, it's a higher time frame. So, it's going to be very respectable because the higher the time frame, the more respectable these trend lines actually are. And what I think is, this is going to take us above this resistance level here. Once we can get above this resistance level here, we can get back above this resistance level. And if we do get above these resistance levels here, this is where I think that this 0.75 can take us potentially all the way up to sort of that target I've been talking about, around $28,500 approximately. If we take a look on the 12-hour, personally for me, I think it could take us all the way up to this level here, around 28,600. We've got to remember, this is going to be a very, very strong resistance level because, previously on the daily, if we take a look on the daily, it's been major, major support. And, it held us up here very, very well because it's very, very strong support. So for me, it's going to act as very, very strong resistance. So if we do get up to that level, I do think we are going to see a very quick sell-off because looking at, the indicators, we are sort of in that, the stochastic RSI is getting in that oversold vicinity. Stochastic is in the neutral and the RSI is in the neutral. So we do have room to move to the upside, and that could take us up to that resistance level. But, looking at 12-hour, if we take a look at the 12-hour RSI, stochastic RSI, we're in that very, very oversold vicinity. And if I just show you what's happened the last two times we're in this oversold vicinity, so back here on the 12th of July, we can see that when the stochastic RSI was in that very oversold vicinity, we saw a huge pump towards the upside, taking us from around $19,300 all the way up to $23,600. Again, that happened here on the 3rd of June. We were down at these levels around $19,100. We had a nice big pump that took us all the way to around $22,400. And because, we are in that vicinity now, we've had this 0.75 for me, and I'm sure for you as well, Ben, it's quite bullish. I do think if we do get above this resistance level here, we are seeing a nice big pump. Taking a look at the minute chart again, massive, massive candles, which is great. If we can get above this resistance level here, the decider will be in around hours and 55 minutes, or 6 hours roughly. If we can break above this level, if we can't do it this candle, then maybe the next candle, then I think, this is a confirmation for me that we can get up to that's $28,500 level. That will also take us above this resistance level here that we've broken back below. But we do have to just be cautious. If we do get a rejection from this level here, that could take us lower. But personally, for me, I think this is very bullish for the markets. If we can get above this yellow resistance level, I think, the likelihood of it is we are going to go to that $28,500, mainly because of this stochastic RSI in that very oversold vicinity. And I did show you, when we are in this oversold vicinity, we see big pumps after. So that's what I'm looking at right now. If we do break above this this yellow resistance level here, I am going to open a nice long position, and I'm going to scale into that long position all the way up until we break above this resistance level here, and then I'll ride that out all the way up to this resistance at around $28,500. So that's sort of my strategy for now. I didn't really give you my full strategy because I was waiting to see what this Fed rate hike was. But now, I've got my strategy sort of solidified, just waiting for the breaks of these resistance, and then I'm going to ride that up, as high as I can, as close to $28,500 as I can get.
Yeah. No, you're absolutely right there. Absolutely right.
Yeah.
And so, I mean, there's a couple different. So, just a quick question here from Rickett. What's the result of the Fed? So, the Fed decision is up by 75 basis point hike, or 0.75%, which is what the market kind of expected. This is why we're seeing, why we've seen that pump. Risk on assets. So, Nasdaq is up about 2.8%. Bitcoin. What is the actual percentage? It's kind of different on this particular candle.
I'll go back onto the 1 minute. So what time that came out?
Yeah, I guess at the beginning of the pump, really.
There we go. So, well, from when it came out, beginning from the pump.
Yeah, there.
2.73%.
2.7% jump. So yeah, so we're seeing that big spike, and I think maybe one of the reasons why they went for the 7.75 instead of the 1% is because the labor market is still relatively strong.
Yeah.
And they don't want to try and, they know they need to damage it a bit, but maybe not so much so that, because you also have to think there's a lot of politics that comes into this as well. But yeah, so at that 0.75, they do have interestingly 2 more CPI prints before they can actually come back and do something. So I think with 2 more CPI prints and 2 more job claims reports, it might be that what they're seeing internally, talking about that core inflation, is that actually they've got everything, or at least we've peaked. So if we've peaked, then they might just continue to do a 0.75, or even continue to see things moving down. But obviously now they've done this 0.75, they don't really need to worry about it for 2 more months. Which is kind of so. But one thing, guys, in 22 minutes, so at 2:30 Eastern time, we will be seeing a meeting. So this is basically an interview of Jerome Powell. So people just asking questions and stuff. And so that's going to be very much kind of giving us guidance for the way ahead. So what is it that they plan to do? Are they worried about jobs reports? Are they worried about XYZ? So these different things are, I guess, going to be, that's going to determine how far this pump does continue to go. So, like we said, it kind of has been a little bit priced in. We are going to see a little bit of profit taking, which I think we have done from.
I think we are seeing that right now. We're seeing a bit of a pullback. I think that is profit taking. We have to be aware as well. There are a lot of bots that will be trading this as well, and they can get in the market a lot quicker than we can. We have to click a few buttons. The bots just automatically do it. And you have to remember that sort of these bots are going to be getting in as soon as that figure came out. And then, they're going to be taking profit as well. So we are going to see a lot of profit taking. I think it would have taken, humans to get in a little bit later. So the bots are probably profiting a lot more than sort of than we are from this. But yeah,
Retail traders.
yeah, yeah,
Yeah. No, you're absolutely right. So I think we will continue to see a bit of a pump, and I think Jerome Powell's going to come out, and he wouldn't have just left it. I think in the meeting that we're going to see in 20 minutes, I think he's going to have very good things to say. If he had bad things to say, he wouldn't say, actually, yeah, do you know what, the economy is quite bad, because he's going away for 2 months. I don't mean he's actually going on holiday, but they're not actually releasing another announcement saying, hey, look, we're going to increase the rate for another 2 months here. So I don't think that he's going to have loads of bad things, because everyone will be like, well, that was really like negligent. Shouldn't you have just done a higher increase now that you can't affect anything for another 2 months? So I think you're going to have fairly positive things to say, talking about the job market. Yes, it is still sustaining, but it is softening, which is what investors want to hear. And then also that inflation is coming down. So it could be that obviously there's a load of different things that come into inflation. But yeah, I think overall, I don't think it was a good idea at 75 basis points, because I really want a rally towards the end of the year. But I guess the next inflation report is going to tell us whether we will continue to see inflation throughout throughout this next couple of months. Hopefully we get something like an 8 point something, or even just an 8 flat. But who knows?
I would love, a prolonged period of consolidation, because it would mean that I can just gather as much money as I can to buy as much crypto as I could. But that's something I think a bit selfish.
High inflation, I don't mind. Just keep the price of Bitcoin down.
Yeah, let me buy some more cheap Bitcoin. Just to answer this question here, are we going long? For me, not yet. Because we are coming into resistance, there is a chance that we could get rejected. We just have to remember that. But once we get above this resistance, I will scale into a long position when we break this yellow trend line here, downwards trending trend line. But then once we break this resistance here again, this one here, then I'll scale into it even more. And then if we do get a bounce like we saw here, I would scale into it more again. But just being aware, that we have had this fake out here. So, it could happen again. But if we can bounce off this level, I'll scale into that position even more, and then ride that towards the upside. I told you my target around $28,500. I do think that's a pretty realistic target. So just waiting for that resistance to be broken, and then I will enter that long position. Remember, we can still get rejected. I told you this in earlier's live stream. We can still get rejected from this level here, and that could potentially bring us down to this support level down here. So we do just have to be aware of that. But for me, I do think this is bullish now, and I do think we can get above this resistance level. Once we do get a confirmed break above that resistance level on this 12-hour chart, then I'm going long, scaling into that long position as we, go up and break more resistances, and then, riding that up till hopefully my target at $28,500. So I'll update you on that, once we do, or if we do, break above this resistance level here.
I might have a sneeze coming. I'm on the brink, but no, it's gone. I didn't want to just sit here in silence with you guys be like, is this guy even here? I'm just there trying to handle a sneeze. But guys, so this, as a bit of a recap, this is the second 75 basis point rate hike that we're seeing. So it's more likely than not that this is going to be the highest level of rate hike that they actually do. We're not going to see any kind of Paul Volckering unless something crazy happens in the next two editions of the rate hike. So yeah, basically, I don't know if you want to mention anything on your screen there, AJ, but yeah, second 75 basis point hike, and I think all eyes are kind of on making sure that inflation does stay down. We're having a bit of a retracement in some of the risky assets, and like I said, I think at 10:30, that's local time, 2:30 Eastern time, is going to be quite interesting. Also, just to quickly add a little piece in, spending and production is slightly softer, which means that that's a good thing, because then there's less people spending and producing in the economy. GDP falls down, inflation comes down.
Yeah.
I think that's part of the reason why they went 75, not 100. Sorry.
Yeah. Yeah, I was just going to add, looking at this chart here, Ethereum. I did mention that $1,400 level as being major support, and we actually did find perfect support along that level, and we are seeing a nice bounce. Obviously, because we are seeing Bitcoin pump, we are seeing Ethereum pump as well. But I did talk about that $1,400 level, and I did mention that was very, very strong support, and we are, finding lots of support along that level. So it just proves to me that this is a major, major level that we need to be, keeping an eye on. And yeah, it looks quite nice that we are seeing this nice bullish price action towards the upside after seeing this sort of Bart Simpson pattern happen here. But yeah, looking good for Ethereum, looking good for Bitcoin, and I'm sure a lot of the alts are going to be following Bitcoin as well.
Yeah, no, they will. I just seen that from Jason.
Thanks for not blowing up my eardrums with this.
No, I would have muted myself. I'm not. I am a monster, but I'm not a complete monster. One day I'll just start talking. Hey guys, I'm gonna do another video, and then just start.
Doing that ASMR.
Oh yeah. Yeah.
Turns into a
just me putting on my protection. Jokes. Yeah, so I mean that's pretty much it, to be honest, guys.
Yeah.
The next major bit of news is coming up in 15 minutes, as you guys know. But yeah, the overview is that the economy is softening. Basically consumer spending is slightly falling. Production numbers are down. Economy is relatively strong. And so therefore that kind of calls for a 75 basis point hike instead of a full 100 basis point hike. But that's exactly what the market was expecting anyway. As you can see from the, what was it called? Yeah, let me show you on the old screeno. On the old screeno, here we go. Let me refresh. Okay, so, yes, okay. I thought this was June, or July, sorry, what we've just had. And I was like, hang on a sec. So basically what we're currently at now, that's not 1.75. That is 2.5. Yes, 2.5. So 2.5, we are then looking at a, what is it? Yeah, 2.5. So 75 basis point hike from 2.5 has a 16% likelihood, or a 50 basis point hike has an 84% likelihood. So you can see the numbers here, and then there's like a 1.1%, but now like no more. So I think what this, and it's going to be interesting to see how how this changes over the course. And I'll come back to this tomorrow, guys. Maybe not tomorrow, because we'll wait for today, the trading day, to be over, but I don't really think this is going to change. Tomorrow, we want the data to come in, so then maybe we'll review it at the weekend, maybe on Friday or Saturday, and just see how these probability changes. But we're kind of looking at a 50 basis point hike in September, and then coming into November, if we're on 3%, we're again then looking at only a 25 basis point hike in November, and then in December, after we're at 3.25, then finishing off with a 25 basis point hike, which, to be honest, or there's actually not a bad probability of a 0 basis point hike in December. But I think that we will. Some people have been talking about pausing the reduction of the balance sheet. That $9 trillion worth of assets that the Fed has, because they bought loads of stuff, kind of like a spending spree during COVID. And that's not actually what happens, guys. They don't just buy loads of stuff. They it's very complex, basically. And they don't just go down to your local supermarket and start buying loads of stuff. Just to be like, oh, I've injected money into the economy. I've got a new Ferrari. But basically, bottom line is that we have very good room for a run towards the end of the year, which is in line with what JP Morgan said, but does go against what Morgan Stanley said, because Morgan Stanley are worried about the earnings reports, and they haven't come out too bad, to be fair. So obviously some companies missing expectations, but the bottom line is I don't think that's really affected the economy too much. There is like obviously an overarching issue that the Nasdaq hasn't fallen as much as it should have. We haven't had like previously. Usually, like Bitcoin drops by 8. What was it? And we'll go through this tomorrow. Actually, AJ, do you have that? Do you have that chart that like Bitcoin drops by 80% during a typical market?
Give me a second. I will just
During a typical market.
bring
I'm so
that.
bad. It is a little bit late in my defense, but so whenever we're in a recession or we're in recessionary territory, we usually then have a specific, so each market will drop by a certain amount, and that's called the drawdown. So from the absolute peak to the trough. And so for Bitcoin, that's around about 84%, I believe, 85 and then 86. I love that, Jason Investor. Don't trust Morgan Stanley.
So
like, you go.
I think this is a chart that you're on about, wasn't it?
Yep.
Yeah. So basically, what we're seeing here is the green line is the bear market of the first halving cycle, and the blue line is the bear market of the second halving cycle, and the orange line is what we're currently seeing right now. I think I'm gonna make another video going into detail, sort of talking about the charts about this as well. So I'll probably go live tomorrow and do that for you. But as of right now, we are seeing sort of a 74%. We'll have a little look at it now. I think that'll be something nice to look at. So basically, we're looking at 74% drawdown approximately as of right now. 74% from that $17,500 bottom. And previously at the bear market of the first halving cycle and the bear market of the second halving cycle, we saw 84% drawback and an 85% drawback. For the first halving, we saw 411 days until we established that bottom. For the second one, we established the bottom in 364 days. So just literally under a year. And then at the moment, we are in this, we've been in this sort of downwards pressured market for around 221 days so far. So what we can look at when we are taking a look at the charts, if I just bring these two closer together so you can see it a bit clearer.
I actually want to have a real close look at that because there might be a little bit of like, because I know that obviously typically each cycle that goes by, there's more and more people that know about Bitcoin. So typically the cycle of the length of a crash will be shorter each time, like very slightly. And so that's something that obviously once you do your video, you'll go into and tell everyone in a bit more detail.
Yeah. So basically, what we're looking at here is 74% down. We are from the all-time high. Now that is from that approximate $17,600. Depends what exchange you're looking at. Some are $17,500. But if we are going to see the price of Bitcoin have an 84 or an 85% drawdown, this also ties in with something that I've been talking about for a while, and I'll go into that a bit deeper in tomorrow's live. But basically,
it's the CVDD. I don't know if it is, guys. I like to just
take the mic a little bit.
I always bring it up.
But yeah, so if we see another 10% move towards the downside, which from 74% would take us down to 84%, or if we saw an 11% move towards the downside, it would take us to 85%, and that would take us all the way down to $15,800 approximately. And you said it now, I might as well bring it up. Let me find it for a minute.
That's all right. No, mate, save some juice for tomorrow. Save some juice.
Okay.
We'll keep them wanting more. I was gonna say, it would. There is more room for to come to the downside. But I guess the question then is, have we hit a bottom? No one really knows. And I think the overall kind of takeaway from this, and it's interesting. I don't know if we should just stay on for 6 minutes and see what the Fed says.
We might as
What
well.
Jerome Powell says. Oh wait, hang on. Wait, something much more important has come up. AJ, check the comments. Much more important.
No.
Much more important.
We didn't get 100 likes.
Yeah, that's it. That is it. Yeah, please go back. Please like the video. I don't know what the title was. Bitcoin sell off. I think it was. Yeah, I want that. I want that 100 likes. Give me. I want to see him dance. Dance, boy.
Oh dear.
But yeah, so look, guys, there's not really too much more to add. Obviously, we will tomorrow be going live. Have a look over exactly if there is any difference at the end of today's trading day. So there's only 3 hours left of the New York session, so that's we're not really going to see too much. I think there will be a bit of profit taking, so perhaps a bit of pullback from the traditional markets and also from Bitcoin itself. But again, in 5 minutes, Jerome Powell will start speaking. And obviously, questions are going to go on for a while. And so that will have an effect on the market. So expect much more volatility over the next hour or so. It's not a guaranteed, hey, everything's going to be great. But overall, the market is now pricing in a much easier second half to the year, kind of starting in about September, unless the next two CPI prints and job prints go absolutely insane and they only keep getting like higher levels of inflation and higher levels of employment. Then obviously the Fed are going to be like, right, we've been away for 2 months, everything's gone down the toilet, let's do like a 400% increase Fed fund rate. That would be absolutely insane.
It would. But yeah, if sort of everything settles and sort of the Fed sorts everything out, then I don't think we're going to instantly see sort of a massive pump towards the upside and reclaiming that 30K, reclaiming the 40K. I don't think it's going to be sort of a steady growth. We're not going to see it instantly, so sort of be aware for that. And it just gives us time to accumulate more crypto during that sort of consolidation period. We are going to have a long consolidation period, and if we have a look now, this could sort of be the start of that consolidation period. So we're going to be keeping a close eye on this, and just accumulate as much. That's sort of what I'm doing right now.
Yeah, and I can say, guys, I think we're going to be in an accumulation phase for at least another next 3 months.
Yeah.
I do see more pressure to the downside coming, and I'm not going to say it's within the next day or two, even within the next week. I think that it's and I see some comments coming up here from Jason. So basically a couple of analysts have said that they're calling for 11 or 12,000 Bitcoin. There are indicators that do say that, especially if you go down and use the percentage to which it's fallen previously, there are calls for $11,000 or $12,000. I don't think it's going to get that low, just because of I think the fundamentals now are slightly different to what they are usually, and that's because there is very big institutional interest. I mean, FTX, for example, have said, look, we have our treasury in dollars, but if Bitcoin gets to a certain price, we will be buying. So there's a lot of people who are sitting on the sidelines, and at that 17.5, it went straight up because everyone was so interested at these lower levels. Get to 15, it's going to be even more. So I think it would struggle to get to that 11K or 10K kind of price mark. But
it's something that we can't, wipe off the table, because again, I've showed you some technical patterns that have indicated 12,000 is something that's that could potentially, be in play. So we can't wipe it off the table completely, but personally for me, I don't think it's going to get lower than sort of 15,500. But no one's going to be right unless you're taking a guesstimate. Everyone's sort of taking a guesstimate, and maybe someone is going to be right, but they were never 100% on their decision. My sort of personal target is $15,500, $600, But, I'm not 100% on that target because I know you just cannot be right, for predicting the bottom.
Yeah, no, you're right. And to be honest, I would say the best thing that, for me, what I'm doing right now is I'm trying to sell my body so that I can raise cash and then I can buy more crypto in this accumulation phase. So, if anyone wants any specific services, I have a webcam. If anybody wants a kidney, I have two, so you can take one of those. But I'm going to be selling myself so I can accumulate as much Bitcoin. It's not financial advice, but I think it's a great idea.
So you
Obviously,
get
I'm
this
playing
kidney
around.
on the black market.
Yeah. Who could I sell mine to? Maybe me and Aikeshi are going to do a duo. We'll do a 2 for 1. Buy one get one free.
Oh, dear.
But no, it's I just think there's a very good opportunity for us now in the next couple of months to actually accumulate.
Yeah.
Because Bitcoin, I think, will stay at these slightly lower, prices. Even if we never get back to 17K, I'm happy to be buying at bloody 20
Yeah.
if we get down to there.
And for our sort of bear market portfolio strategy as well, we had a buy order at
Bear
18,000.
market or the bare naked market?
So we can sort of be happy to say, that we have bought Bitcoin at 18,000. If it doesn't ever go down to $17,500 again, then we can say that we were sort of $500 off the bottom. I know that I had a lot of buy orders at 19 and 18,000 for my personal portfolio as well. So we can say that we have bought as close to the bottom as we can. So this is why sort of dollar cost averaging is very, very sort of strong and a very good way to accumulate your crypto. And I'm still dollar cost averaging in whenever we do see these pullbacks. I'm dollar cost averaging in, and when we do break these resistances, I do open some long positions over on sort of Bybit and Binance every now and then. So yeah, dollar
What I
cost
will do,
averaging.
guys, just if I'm going to let you quickly listen to what Jerome Powell has to say. This is just, I won't be able to show you on screen, but here is what he's talking about. If you want to listen to this, I'll keep on for a couple minutes.
This backdrop today, the FOMC raised its policy interest rate by 0.75 percentage point.
Can you hear that, AJ?
And anticipates that ongoing increases in the target range for the federal funds rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. And I'll have more to say about today's monetary policy
That's a 9
actions
trillion.
after briefly reviewing economic developments. Recent indicators of spending and production have softened. Growth in consumer spending has slowed significantly, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened, in part reflecting higher mortgage rates. And after a strong increase in the first quarter, business fixed investment also looks to have declined in the second quarter. Despite these developments, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 375,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued.
AJ, can you bring us onto a lower time frame on
Little
Bitcoin?
changed since January. Overall, the continued strength of the labor market suggests that underlying aggregate demand remains solid. Inflation remains well
That's a
above
double
our
top,
longer
innit?
run goal of 2%. Over the 12 months ending in May, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In June, the 12-month change in the consumer price index came in above expectations at 9.1%, and the change in the core CPI was 5.9%. Notwithstanding the recent slowdown in overall economic activity, aggregate demand appears to remain strong. Supply constraints have been larger and longer lasting than anticipated, and price pressures are evident across a broad range of goods and services. Although prices for some commodities have turned down recently, the earlier surge in prices of crude oil and other commodities that resulted from Russia's war on Ukraine has boosted prices for gasoline and food, creating additional upward pressure on inflation. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 2.25% to 2.5%. And we're continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. Today's increase in the target range is the second 75 basis point increase in as many meetings.
Ooh, breakout.
While another unusually large increase could be appropriate at our next meeting, that is a decision that will depend on the data we get between now and then.
They will raise it if they need
continue
to.
Make our decisions meeting by meeting.
You're very strong, Mr. Fed.
And communicate our thinking as
like
clearly
you.
as possible. As the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and
That's
inflation.
the bull run at the end of the market, at the end of the year.
Our overarching focus is using our tools to bring demand into better balance with supply in order to bring inflation back
to major resistance again,
and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways.
Oh, that's
Inflation
nice.
has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to return inflation to our 2% longer run goal. This process is likely to involve a period of
maybe a push up and then a
economic
consolidation above this line,
some softening in
retest, and
economic
then
conditions.
push to the upside.
But such outcomes are likely necessary to restore price stability and to set the stage for achieving maximum employment and stable prices over the longer run.
Breaking above it on the daily.
We understand that our
That's
actions
very
affect
bullish because this is a very strong resistance level down here.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Whoa, go on, bud. All right, so that was Mr. J. Powell.
Yeah.
Powell. At the old Fed.
The market's reacting well to what he said. So
yeah, well, it said likely appropriate to slow increases at some point. And obviously he said he's going to be looking out for what's going to happen over the next couple of months. But like I said, midway through, does seem like we could be in the market for a bit of a pump. The Nasdaq has jumped 0.5% since I last checked it about 15 minutes ago, which is very, very good. And obviously we're seeing Bitcoin is also jumping as a result of that as well. I was just kind of reading some news. Okay, so yeah,
a nice pump in the Nasdaq, which is good.
Yeah, so what we're kind of looking out for here, guys, is that if we do break above, if you go onto Bitcoin, so looking at this, if we continue to see a bit of movement to the upside, what I think we're going to want is potentially just kind of push above this area of resistance. Now, we're only looking at a line and we're only on the 1 minute chart. So
Yeah.
I'm not saying, hey guys, get your longs out for the boys. But what I'm saying is, if we do see a push above, we're going to want to see a pullback, i.e., a little bit of a retracement,
Yeah.
and then a movement to the upside before I personally would feel comfortable getting in. So a movement up and above the area of resistance, and then coming back down to test it as support. And once that's been confirmed on a slightly higher time frame, maybe like a 4 hour or something like this, maybe a 1 hour, but definitely not a 1 minute or a 5 minute,
No.
then I would feel comfortable for taking a long position for myself there.
Yeah, definitely. And it goes back to sort of what I was showing you on this 12-hour chart as well. We do have 5 hours and 20 minutes left of this candle. So I do want to trade this if we do break to the upside. So I might have to set an alarm for 5 hours, for a 5 hours time. So I'll wake up and see what's happening with this, because we are breaking to the upside as of right now, which is very bullish. But I want it, a nice candle break to the upside. Then we'll come into this resistance, hopefully break above that resistance. But I do think, we'll see slight resistance here, maybe a pullback, which will give us another, level to get into. And then, I'm going to ride this up. Like I said, if we do break to the upside here, we break this resistance here as well. I'm going to hopefully ride this up to $28,500. That's the target I'm looking at. And this sort of confirms that as well. What we're looking at here is, a very, very strong resistance level on the daily chart. You can see lots of resistance previously. And we have being rejected from this level each time. We came and tested this a few days ago as well, last week, and we did get a rejection again. But this news that we have had from the Fed, that 0.75 basis point hike, we are getting some nice bullish price action towards the upside. If we can break to the upside out of this is going to be very, very bullish for the market, and then we can start seeing sort of the price of Bitcoin sort of increase slowly. I do think it's going to be a slow move to the upside, but initially we are going to see the price come up, and then I do think we are going to get a lot of resistance at $28,500. So when we do get to that level, I do think we are going to have a big sell-off and the price is going to come back down, consolidate a little bit, and just give us more entry points to get into sort of dollar cost average as well. But initially, if we can get this daily break today, that would be great. If not, it could happen tomorrow. So I will be keeping a close eye on this, and I will be updating you with this as well, and sort of what I'm doing with my trade as well.
Yep. And just to kind of clarify here, Akeshi, so when we talk about a retracement, so that will typically be to an area of support. So if it is that we're looking, I don't know which one you were talking about just now, whether we push above this box of resistance, come back down, a retracement basically means just come back down, or if you're talking about this yellow line.
Well, what I'll be looking for is a candle break to the upside. Then the next candle, I think we would hit slight resistance, but because it's 12 hours, we could hit slight resistance, have a pullback, and then that same candle could break to the upside, because there's so many hours in that 12-hour candle. So what I'll be doing is I'll be opening along when we do break to the upside here. Then if we did have a pullback back down and test this level here, then I would, dollar cost average my long position down a little bit more. Then if we were to break above this resistance here, then I would, scale into my position even more. And once we get that, confirmed break, I will, be scaling into that. Then if we have nice price action towards the upside and then another pullback back down here, I would scale in again. And then hopefully if we do get that bounce, I would scale in even more, and then sort of ride that up. Maybe putting in 25% of what I want to use for this trade each time, just so I'm making a really, really safe trade, applying that proper risk management, and having that stop loss in play. But so the first entry point I'll be looking at is a break to the upside here. Then for the second entry point, I'll be looking at the retest of this. And, it doesn't have to be a candle retest. It can be a wick retest as well. And And then the third entry point breaking above here. Fourth entry point would be the retest, and then the fifth entry point would be the bounce from that support, which was previous resistance.
Yeah, just as a quick update, guys, I know you wanted to listen to some of the questions as well. Obviously, I can't put it all out, can't put it all on display. So that's just because copyright. But the Fed has said that it's going to offer less clear guidance on rate moves, and they're going to take everything step by step. So we're going to see less indication of what's actually going to happen. But they have said that they're more than happy to introduce higher rates in the future if needed, which kind of shows, right, you guys seem to have it under control. That's confidence. They seem to know what they're doing. Jerome Powell has quite a good level of composure at the moment. Just a heads up, though, guys, the Nasdaq is up by 3.7% almost. It's 3.91 on the intraday. S&P is up by 2.3%. So overall, we're kind of, it's a crazy jump to have. Basically, what I'm saying is, these numbers are not expected in the stock market. So, it is kind of expected that we will have a bit of movement to the downside. I'm not going to say just yet, but remember, anyone who's made 4%, for example, if you've entered a trade and you're a hedge fund is expected to return 10% every single year. If you do 4% in one day, that's absolutely insane. You never really see those gains. So when that happens, be sure that towards the end of the day, they probably will begin to start selling off some of those positions. So, if you're in a long, which some of you have said that you are, that's absolutely great. But just be careful and don't just think, okay, I'm going to stay in this, unless you want to make it a long term, but expect a little bit of a pullback. Take some profits, start scaling out of your positions. I'm not going to say right now, but just keep looking at those smaller time frames. Look at the volume. If you see that begin to fall, cut your positions, because that's exactly what the big institutions will do. But we are continuously moving up at the moment, so it's okay for now.
Yeah, remember, always, remember to take profits, because especially now, because we are coming into that resistance, this major resistance coming up here, and looking on the daily as well, you can see that, we are, we're breaking above the resistance, but we still have 5 hours left of this candle. So, things could change. We could have a pullback, but initially this is very strong resistance. So, just be careful with those long positions as well. If you are in a nice profit, what I normally do when my trade is in a nice profit, I'll move my my stop loss up, above the entry point, and it just means that you can't actually lose money in any of your trades.
Yeah, that is actually really, to be honest, I would say if you're in any profit at the moment, move your stop loss to take break even, sorry.
Or just above break even, because even if you put it at break even, you do lose a little bit because of the fees as well. So I always tend to put it a little bit above.
Look at this guy, spoken like a true hero. Absolutely love that. Love that a lot. But yeah, guys. So yeah, just keep an eye out. Move on to the slightly lower time frames. I would say now, if you're in a position, just to manage it. Obviously, if you go to the 1 minute, there's going to be a lot more volatility, and you're going to be like, I should buy, I should sell, I should buy, I should sell. So keep that in mind. But yeah, you're not making money if you don't actually secure the profit. So keep that. A trailing stop. Yes, Jason, you're absolutely right. A trailing stop. Not many people use trailing stops though.
No,
I think they should.
Yeah, it's quite a handy tool. I've used it a few times, but I never actually apply it every day.
Yeah, see, I quite like them, but the thing is, you've almost got to program a trailing stop. So does it either follow you by a certain number of pips, or does it follow you by a candle close? And if so, what's the time frame? So it can be a little bit complex. But if done right, it makes it really easy, because you just put in, I want my entry this, and I want my stop loss can just follow me, so I can just walk away from my computer. So it's great if you have a day job and stuff.
Yeah, it's great handy tool.
But anyway, AJ, is there anything more you want to mention before we sign off?
No, just to clarify, if we break above here, I think that it's going to be very, very bullish for Bitcoin, and again, I'll be looking at entering a long position if we do break these resistance levels here. That's sort of all I've got for you, and use protection.
Always use protection, guys. You know,
Yeah.
like we said, this is this is like it's definitely, you know, we're drawing this comparison between like relationships and trading, and like, you know, this is one of those days where you're like, oh, I love my partner, yeah, they're so great, oh, I love you, know, you're amazing, but then you wake up tomorrow and you didn't put your stop loss on and you've lost all your gains, and you're like, oh damn, yeah. No, I shouldn't have trusted that person.
Yeah.
But anyway, all right, guys, I'm gonna go to bed. It's good to see you guys again. Glad that we went through this. Saw a massive pump. Yeah, market kind of expected it. Good to see that we, you know, I guess hopefully all made a little bit of money with our you know, putting orders in. So like the video as well. I know there's not many of you left on here, only about 20 or so, but just, yeah, make sure you like the video, subscribe to the channel, and come back tomorrow for a bit more juicy gossip.
Yeah. Thank you very much for watching, guys. We'll see you tomorrow.
See you later. Take care.